Are you tired of working hard and barely making ends meet? Do you dream of a life filled with financial freedom, where money works for you instead of the other way around? Well, your dreams are about to come true. Did you know that there is a way to generate consistent income without lifting a finger? That's right. With dividend-paying stocks, you can earn money while you sleep. But before we get to that, hit that subscribe button for more content like this in the future. Dividend-paying stocks are a powerful tool that allows you to tap into the profits of successful companies. These stocks pay out a portion of the company's earnings to shareholders, providing you with a steady stream of income. And the best part? They pay now and forever. In the ever-evolving world of finance and investment, one strategy has remained a cornerstone of building long-term wealth: dividend investing. In this comprehensive guide, we will explore the concept of dividends, why they matter, and how you can harness their power to generate a steady stream of income, now and for years to come. What is a dividend? A dividend is a payment made by a company to its shareholders. This payment can take the form of cash or additional shares of stock. Dividends are typically paid out of a company's profits as a way to reward shareholders for their investment. Imagine having a consistent flow of money that helps cover your expenses, allows you to travel, and gives you the freedom to pursue your passions. Dividend stocks are your ticket to financial independence. In times of market uncertainty, dividend-paying stocks can provide a sense of security, as they offer a consistent income stream regardless of market fluctuations. So, how do you make money with dividends? It all starts with selecting the right stocks. By investing in companies with a history of paying dividends, you can begin to receive your share of their profits. This can be a powerful source of passive income. But how do you get started? It's simple. First, do your research. Look for companies with a track record of regularly paying dividends. You want solid, reliable companies that have a history of success. Investing in dividend stocks requires careful consideration. Factors such as a company's track record of dividend payments, dividend yield, and financial stability should all be taken into account. Diversifying your dividend portfolio is also key to managing risk. There are some factors to consider before choosing the best dividend-paying stocks, such as stability and history. Look for companies with a consistent history of paying dividends. A long track record of dividend payments can be a good indicator of a company's financial stability. Dividend yield considers the dividend yield, which is the annual dividend income relative to the stock's price. A higher yield can mean more income but may also indicate higher risk. Dividend growth. Companies that consistently increase their dividend payments over time often make attractive investments. They demonstrate a commitment to returning value to shareholders. A company that gives value to the world would be most likely to be the one company with loyal investors, because they tend to make the investors feel proud to be part of the shareholders of owning the company and feel appreciated over time. Earnings stability. A strong earnings history is essential. A company with reliable and growing earnings is more likely to maintain its dividend payouts. Payout ratio. Analyze the dividend payout ratio. A lower ratio suggests the company has room to increase dividends or reinvest in the business. The dividend payout ratio is a crucial financial metric that helps investors assess the sustainability and attractiveness of dividend-paying stocks. It represents the proportion of a company's earnings paid out to shareholders in the form of dividends. In essence, it measures how much of a company's profit is returned to its investors. The formula for calculating the dividend payout ratio is dividend payout ratio equals dividends per share divided by earnings per share. Some companies would reinvest some of the profit back into the company, such as for research and development purposes. Pharmacy companies, for example, need to continuously do research and development, while other companies like Coca-Cola, which is famous for its secret recipe, would probably need a lesser portion back into their company in terms of research and development. Then how do we choose the best dividend-paying stocks based on their payout ratio? And how should we know which fits us best? This is where your financial education comes into play. Dividend investing isn't one size fits all. Every stock is different, and there are many factors that should be considered before choosing one. There are various strategies you can employ, from dividend growth investing to high-yield investing. Each approach has its pros and cons, and the strategy you choose should align with your financial goals. Small payout dividend-paying stocks can be a golden goose in the future or longer holding period because they continue laying golden eggs that in time will pay for the golden goose itself and continue becoming a passive income stream for as long as the company exists. Next, choose dividend stocks that match your financial goals and risk tolerance. There are different types of dividends and payout frequencies to consider, so make sure you understand your options. Investing in dividend-paying stocks can be a wise strategy for building wealth and generating a steady stream of income. However, the success of your investment journey largely depends on selecting the right dividend stocks that align with your risk tolerance and financial objectives. If your risk tolerance is low, you may prioritize stability and consistent income over high yields. In this case, consider well-established companies with a history of paying dividends, often referred to as blue-chip stocks. These companies tend to weather economic downturns better and maintain dividend payments even in challenging times. Companies like Johnson & Johnson, J&J, or the Coca-Cola Company, Co., are known for their stability and consistent dividend payments. One of the reasons is that they are able to preserve their unique recipe. Investors with moderate risk tolerance can strike a balance between income and growth. Look for dividend-paying stocks with a history of both dividend growth and capital appreciation potential. These stocks may offer higher yields than blue-chip stocks while still providing a level of stability. Microsoft Corporation, MSFT, has been growing both its dividends and stock price, making it an attractive choice for moderate risk investors. If you have a higher risk tolerance and are seeking maximum returns, consider dividend stocks from sectors with higher growth potential, like technology or emerging markets. While these stocks may offer higher yields, they can also be more volatile. Technology companies like Apple Inc. AAPL have started paying dividends and offer growth potential, but they may experience more price fluctuations. If your primary financial goal is to generate regular income, select dividend-paying stocks with attractive yields. Focus on stocks with a history of consistent and growing dividend payments, as they can provide a reliable income stream to cover living expenses or supplement retirement income. Real estate investment trusts, REITs, such as Realty Income Corporation, O, are known for their monthly dividend payments, making them a popular choice for income-focused investors. But if your goal is long-term wealth accumulation, look for dividend stocks that not only pay dividends but also have strong growth potential. These stocks can help you build wealth through a combination of capital appreciation and dividend reinvestment. Dividend growth stocks like the Walt Disney Company, DIS, have shown the potential for substantial capital appreciation over time while increasing dividend payouts. Diversifying your dividend portfolio across various sectors and industries can help mitigate risk. Diversify your holdings to spread the risk and maximize your returns. Consider how different stocks can complement each other and contribute to your overall financial goals. Choosing the best dividend-paying stocks based on your risk tolerance and financial goals is paramount to your investment success. Tailoring your investments can lead to a portfolio that not only provides financial security but also helps you achieve your desired outcomes, whether that's generating income, accumulating wealth, or striking a balance between the two. The next step will be developing a long-term investment strategy. Building a portfolio of dividend-paying stocks takes time, patience, and careful planning. One of the most effective ways to grow your wealth with dividends is by reinvesting them. Dividend reinvestment plans, DRIPs, allow you to automatically reinvest your dividends into more shares of the same stock, compounding your earnings over time. By understanding the power of dividends and applying the right strategies, you can create a portfolio that pays you now and continues to do so well into the future. Finally, sit back, relax, and let your money work for you. As these forever-paying dividend stocks continue to generate income, you can reinvest the dividends to compound your returns. Over time, you'll see your passive income grow and grow. So why wait? It's time to take control of your financial future. Start building your forever-paying dividend portfolio today. Don't forget to subscribe for regular updates on financial education, more tips and strategies for achieving financial freedom, and share this video with others who are interested in the world of dividend investing. Thanks for watching. Take care and stay financially savvy.